Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment to Traders review. Today we're going to be analyzing one of the last reports of 2018, number 50. Before I start the review, a reminder for all of you, we've got two new services out, FuturesTradingGuides.com and FXTradingGuides.com. If you haven't yet checked these services out, please do so. They're great supplemental tools for COT analysis. FX Trading Guides has also started analyzing cryptocurrencies as well, so a lot of material over there. Let's start off with our first market for the review, which will be the S&P 500 with a 26% change in commercials positions. You can see that over there, 28 in large speculators. Since we're talking about an index, of course, this change size is not that dramatic. It, of course, is a bearish change signal suggesting there could be further declines in the S&P in the next couple of days. And jumping to the 5-year chart, we will have a chance to look at the COT Extreme, which, as you can see, near this top was at close to all-time bearish levels in case of the S&P 500 market. So since then, this decline has happened, and of course, in that respect, we can say that the signal was an effective one, but of course we'll see in the next couple of weeks, month, how this develops, whether or not this will continue, or we will get a shift back towards higher prices. And in that case, of course, we'd be expecting another bearish extreme. Moving on to the silver market, where we have this 15% change in commercials position. Now here, this 15 is actually a much greater change than the 26 in the S&P. As I've said many times earlier, these reports, the charts that you see, the COT charts, are a bit different than technical analysis tool like the RSI. They're not derived from price. They have a different meaning. A little bit of fundamental analysis over there since we're looking at traders' positions. So basically what I want to say is that this 15% is definitely much greater than average amongst the largest changes in the past 52 weeks. It suggests that the price of silver will decline early next week. And of course, if we jump to the 5-year chart, you may see that we are actually moving away from this huge all-time bullish COT extreme that we've experienced in the market. But as you may see, there hasn't been a significant change in the trend. Price is stagnating over that over this level over here. So we're going to see what happens to silver. I suspect if the decline continues, we might easily see the rise of the extreme towards the bullish side again. Of course, if this isn't the case and we would see higher prices coming in the next couple of weeks, then of course this trend that we see in traders' positions may easily continue on. Feeder cattle is our next market with a 12% change over there in commercials positions. Again, larger than average change size, bearish, suggesting there could be some lower prices coming early next week. Jumping to the 5-year chart, you can see that we are still at a bullish COT extreme situation if you look at commercials, also large speculators. And of course, in the case of feeder cattle, we can say that a lot of small speculators are actually, we can consider them to be commercial participants, mainly hedging their normal business on the futures markets. Simply they're not reaching the limits that CFTC puts out for becoming a commercial participant. So that's just something in brackets over there. What I want to say is that we still have this bullish extreme suggesting there could be much higher prices coming in the medium to long-term future. But for now, we're going to be focusing on this little bearish COT change signal. Now, jumping over to large speculator COT extreme, we see lumber on top of our list with the 146 report extreme. So we're going to jump over to that 5-year chart where everything becomes a little bit more easier to see. You can see that means that 146 roughly 3 years ago when traders were at such levels. The global picture, of course, if you look at the chart, is quite easy to see that it is, of course, bullish from the report's perspective. But if you look at this 5-year chart, we see even greater extremes in the past, suggesting we may have to be a little bit cautious and patient and there's a possibility of even a greater extreme to come. Nevertheless, it's an extreme that we should be taking into consideration when trading lumber. And it says that in the medium to long run, there could be a major shift in the trend. Crude oil is our next market. We have this 105 report extreme in large speculators. And if we open this 5-year chart, you can see what that means. We're getting closer to bullish extreme levels, no question about that. But let's not forget that the last major extreme was this area, I would say, not pinpointing to that level, but this area we were heavily bearish for quite some time early this year, and as you can see, eventually it actually hit the market, and traders shifted their positions accordingly, and we saw the price of crude oil go down. Whether or not this is an extreme that could push prices back higher is of course hard to tell, but that's just one aspect of analyzing the market. So we know for fact that it has been 105 reports since traders were at such levels, so meaning roughly 2 years since CFTC's been publishing the CO2 report on a weekly basis. So that's that. And the last market for this review will be the soybean meal market with a 62 report extreme in large speculators. So meaning roughly a year ago, the traders were at that level. And you can see on the chart that there's still some space left to reach even greater extremes. Nevertheless, it's relatively bullish and suggesting higher prices coming in the medium to long term. And of course, technically, if you analyze the market, that could also come to the same conclusion. So this is only something that could reassure your normal analysis. So that was all for this short review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.